What's good, y'all? Welcome back to the Market Mentor Ventures channel. My name is Dahuda Hunter, the Market Mentor. We are back with another monthly market breakdown for you guys. Last month, we talked about June, certain things to look for within the market. We talked about healthcare sector, how it was at a key area of support, tariffs. Here we are in July with tariffs are still very much so present. We discussed that deadline was July 9th. So that is actually this week coming up. Today is actually July 7th. This is pre-market time right now. So we're going to jump into July. We're going to talk about certain seasonal trends, last year's performance, and what is happening currently in the markets, right? Past 2 weeks have been a blast for me. Got to spend time with the DMV earners from EYL. Then after that, I was in New York with the earners as well. Hey, community, man. Community is everything. But here, we're back at it again to break down another month with you guys. So let's get into it. This content is presented to be used and must be used for informational purposes only. It's important to do your own research before making any investment decision based on your own personal circumstances. You should take independent financial advice from a professional or independently research and verify what you hear on this channel. Alrighty. As you guys know from the last months, I like to use the Almanac to get some historical context and then compare it with what's actually happening now, what happened last year. Last month, we talked about the various catalysts that shaped what the summer looked like in 2024. Based off of the Trader's Almanac insights for this month of July specifically. July is the best month of Q3 historically, especially in post-election years. So that would be this year. The start of the second half of the year brings an inflow from retirement funds. That early uptick in July that they typically see is related to that. That's not the sole catalyst, but that is one of them. And then they also stated that mid to late July tends to be the most volatile. So when we're looking at a chart specifically to see what volatility looks like, we would look for like long wicks on a candle. That shows the price has gotten up to a certain price point, and then people were able to bring it back down. So we'll be looking for that on the July candles. Even though it's the best month of the third quarter historically, it also starts the worst 4 months for the NASDAQ specifically. That's going to be interesting to watch. And I posted here below some screenshots from QQQ from last year, and we see that, well, hey, I mean, July started off strong. We're looking to it deeper, but we see July started off strong and then got to mid-July, was struggling, and then it dropped off into August. And then we see here on SPY as well, similar situation. July started off strong and it dipped off into August. As of right now, QQQ is up 8.8% on the year. SPY is up 6.7%, and the Dow is up 5.3% on the year so far. I'm actually going to share the Dow's chart too. So how did the Dow look? I know last year we talked about that huge tech sell-off. It essentially carried the whole market, tech and AI, for that whole first half. Had some cooling of the inflation and then got some interest rate news that was great. That led to bullish market for the broader market, and tech pulled back. So let's see, July 1st we have here, second week, and here's that volatility. It did land in mid-July because we see that long wick got all the way up there and we pulled down here. Same with July, there's a pretty long wick here, pushed up. So there's some volatility we see last year happen in the Dow, but overall an uptrend. And then August comes and we completely collapse there. SPY, what are we seeing? Similar situation. July, yep. And then we got to the middle and then we collapsed. So I wouldn't say there's crazy volatility here. I don't see too long of a wicks, but we do see that change in direction though, starting at mid-July. And let's look at the tech. And remember, like we said, tech sold off at the middle of the year. So July 1st, yeah, literally. It was just the first week that was good for July, then every other candle was red and it went to the downside. So, hey, based off of that insight of saying that, mid to late July is the most volatile and that July starts off strong, I mean, it's adding up, and then this starts the worst 4 months for the NASDAQ. I mean, hey, we have 5 weeks in July and 4 of them are bearish candles. That does look like a pretty bad start. So talking about seasonality, right? I like to use bar chart. Bar chart is an amazing resource to use. I used to think that I mastered bar chart until I realized there's so many layers within bar chart that needs to be learned. But this is just one that I like to look at to get a gauge for historically how have sectors performed. So we see here in the first one, this is the NASDAQ, and we see July is actually on average the best month for the NASDAQ. We see since 2010, only in 2024 it was negative. So that's a strong bullish sentiment for July. We look at SPY now. July on average the second best. November is 3.28. Since 2010 we had two negative returns for July for SPY. As for the Dow, same since 2010, only two negative returns. And this is the third strongest. We have 2.43, 3.68. Yeah, the third strongest month for the Dow. So that's interesting information to gather there and utilize. In regards to the current landscape of things, so we've reached all-time highs after that correction in April. Everybody was scared. I think it was like Liberation Day. Marcus was an extreme fear. And we always say that's why we buy when there's fear in the streets. When people were saying the market's collapsing, you want to be that odd person that ignores the noise and say, you know what, this is a good opportunity, because there were plenty of opportunities to buy shares of quality companies. Like the market was down like 20%. So, and we have already recouped that back to all-time highs at this moment. So that's why it's always important. Stick to your process, stay disciplined, or eliminate a lot of the noise that you may hear when the market is red, because that's actually the best time to be in the markets. Fed uncertainty, there's still a lot of uncertainty, sticky inflation. That may override seasonal tailwinds with all this between the tariffs and the Fed deciding if they're going to cut rates or not. That may change things seasonality wise. That's something to watch as well. They were hinting that there would possibly be cuts this month, but that changed quite quickly once they saw the job reports come back last week, I believe. Keep in mind that the tariffs, we won't really see the impacts of the tariffs as of yet. Within this third quarter, though, we should see how those tariffs have been affecting the market. We mentioned that tech is extended right now. One example, we see the Jensen, the CEO of NVIDIA, he recently started selling his shares as NVIDIA reached its all-time highs. I think NVIDIA is at what right now? NVIDIA is hanging around 159 now. He just started selling a lot of his shares within the recent couple weeks. Hey, he's taking profit. I don't remember the last time it said that he sold shares, but he's taking his profits, which is a smart thing to do. So people may be taking profits, selling off like essentially what happened last summer, or rotating into defense because of the uncertainty, or looking at value sectors. That's key to look at. The next thing to pay attention to for this year is going to be the crypto regulations as well. So that's a major market catalyst. The US government actually recently announced that July 14th to July 21st is officially crypto week. And within that week, they're going to be going over the bills associated with cryptocurrency. So what are those bills exactly? The Clarity Act. That's what's going to set clear rules on which agency is overseeing what. Then we have the Genius Act. That's going to make sure that stable coins are backed by real money and regulated. And then we have the Anti-CBDC Surveillance Act. This blocks the government from launching a digital dollar that can track spending. So being that all these bills is what's going to be gone over for that week, is showing you how serious we are about this financial revolution, adopting crypto, and that it could shape how the U.S. treats crypto going forward. So for me, I'm watching both the actual asset of crypto, and I'm watching stocks associated with crypto at this moment. Tech and AI stocks, they're always going to be on the watch list, hands down, because tech is what is pushing the world right now. Everything revolves around tech. AI is starting to become more adopted. Companies are utilizing it, essentially getting rid of a lot of the workers because they have AI that can replace that, which is why it's important as an average person to understand AI, utilize AI as much as you can so that your role doesn't get impacted, because The more you use AI, you can actually teach those who don't know how to use AI to use AI. And once you're more familiar with it and a company sees that, they're more inclined to work with you versus somebody who has no idea what AI is to begin with. Healthcare sector as well, like I mentioned, they're still hanging at like a key area of support here. And we'll look at the chart soon, but it's XLV for me right now is like looking very choppy. Full disclosure, I was in a call, but I wasn't liking how choppy it was at that support, the monthly trend line that I drew. So I'm just being patient, waiting for like a better opportunity. But speaking of healthcare, with Trump's big, beautiful bill, it may not be so helpful for companies like United Healthcare, who recently had, higher ups in their company buying up shares in that last recent dip. They offer Medicaid plans on a per person basis, right? And this bill aims to cut Medicaid and ACA, which is the Affordable Care Act, spending significantly. So fewer enrollees is going to hurt their revenue. Recently, in the short term, the Senate actually rejected some of those severe Medicaid and ACA subsidy cuts in the bill. And that helped provide like a short-term positivity. So that's why there was a slight spike in their pricing. I think it happened last week. That's something to stay on top of and monitor, because if they decide to cut Medicaid and ACA or like the way they wanted to do it in that bill, and it's fully enacted, it may be a negative in the mid to long-term aspects for United Healthcare. Keep an eye on like any Senate amendments, final bill provisions, because that's going to be important. Although United Healthcare has diversified revenue streams, those cuts applying to them can still weigh on that company's future growth. That's something to pay attention to for sure for this month. Last but definitely not least, crypto. Like I mentioned before, crypto and crypto related stocks, they're poised for a big move in the near future. I specifically focus on the ISO 222 compliant tokens. These are just a few to mention. XRP, XLM, XDC. I know everybody talks about Bitcoin. Yes, it's digital gold, store of value, but it doesn't have any real use case per se. At least these crypto technologies here have a use case. What is the problem that they solve? Well, XRP, they solve the problem of that banks have to deal with this slow and expensive bank transfers. So imagine you're trying to send money overseas. It takes days, and banks charge a huge fee for those transfers. Well, XRP makes that process instant and super cheap. It's like texting money globally without any delays, essentially. That will be used for cross-border settlements and bank payments. XLM on the other side is more so for the retailers. In third world countries and emerging markets, people may have a phone, but they don't have a bank account. For those of us in America, we're grateful. Most people do have a bank account here, but this is not just about America. This is like a global financial revolution. XLM is going to be beneficial for those emerging markets. Those people who don't have a bank account, but they have a phone, they'll be able to send money to each other, right? So think about somebody in another country who has a phone, no bank, but Stellar allows them to receive money instantly. It's almost like Venmo for the unbanked. XDC. Problem that it solves: trade, finance, supply chains are slow and full of paperwork. This is going to help digitize and make deals faster, safer, and cheaper. Everything's going to be on that blockchain. Picture two companies in different countries trying to ship and pay each other. Normally that's very messy, dealing with paperwork and, supply chain issues. With XDC, it's going to be used to make those global trade settlements and document validation a lot more simpler and easier. And it's going to be on the blockchain. So it's going to be there for everybody to see. There won't be any confusion. Another thing that's important to keep note of is the FedWire and ISO 222 deadline. This is important to know because the deadline for all financial institutions globally is November 15th. You have to think of FedWire as it's like an express lane for banks to move money fast, secure, and make it final. They will be switching off of the current Swift MT messaging system to ISO 222. And that's why these tokens so far that I mentioned are important, because they are already in compliance with that change that's going to happen. This is going to create a global language for all financial data, faster transactions, cleaner reporting, and just better compliance overall. and it's going to be the backbone of the financial shift happening quietly behind the scenes. Being that these tokens are already positioned for this change, that's what I need to know to make a sound decision as to if I'm going to be investing in them. And I believe it was July 14th. There's a deadline for institutions here in America, if I'm not mistaken. I'll double check on that, but just going to show you XLV. We're talking about healthcare. You see this yellow line? This is that monthly trend line that you guys saw in the last video too. Sellers are getting weaker and weaker. RSI is at 45, not too bad, but all this chop here, I'm not feeling. Wasn't really feeling it. I see from here, I drew this weekly trend line because at one point was support until this candle came in and broke below it. And ever since then, all these candles have been wicking through it, but closing below it, minus this week of June. And then last week we did the same thing. We wicked above it and then we closed below it. I'm just keeping an eye on it. I'm just trying to find a better opportunity to re-enter. We can look at UNH real quick too, because I mentioned that. It took this nasty drop, but that nasty drop was just retesting this 2-month breakout. This was in 2020. Literally retested it. It went a little bit further down than that, but closed right above it. And so here we are on the monthly, right above the 200 and right above this 2-month support. And there was a lot of buyers in this area, insider buying within this wick. UNH is not at an all-time high. It's still a quality company. It's still in some of the sector's top holdings like XLV, the Dow. With that bill in mind and, you know, all that other headwinds that they're facing, this is key to watch. Because although technically they're at a great position, a great opportunity here to start trending back up, there are still some obstacles that they have to overcome at this moment. So with this watch list, it's important to understand that you don't want to chase what's hot. Like we just talked about, majority of the market is already at an all-time high. Your risk to reward ratio is not in your benefit at this moment, or at least in my opinion, I should say, because we're at all-time highs already. If you entered back in April, that's great. They retested a lot of support areas and they have reclaimed those positions. Talked about crypto. We talked about the ISA 200 coins specifically. I did want to share an example of what I mean when you don't have to chase every high, right? When things are at an all-time high, for me, I try to find quality companies that are somehow didn't get to their all-time highs with the rest of the market and present a opportunity. Like UNH is one of them, but they do have a lot of things going on at this moment. Let's show coin, because I shared that play with a client of mine, and boy, the returns they got was amazing. This is coin on the weekly here that I was looking at. It was respecting this weekly resistance, and we finally broke through here on the week of June 16th. This was back when it was at like 248, 250 range, and broke through, and it also closed above that 2-month trend line here, this orange line, and took off. It was also during a time when Israel had just bombed Iran. And in my head, I was like, oh man, Iran's about to retaliate. I think right before a weekend, I was like, it's going to cause everything to go down. Well, not coin, clearly. I think they had recently just passed the Genius Act from the Senate, now it's onto the House. It's been running ever since. And that client, he got a nice return. It was like 400+% return. So that was amazing. We could also show Kava real quick, because that was one of the more recent ones we looked at as well. If you see here, we formed a nice little double bottom, and so far we are following that chart pattern. Kava is one of the leaders in that restaurant fast food area sector, I should say, and they were about $7 off their 52-week lows. So in my head, I was like, okay, they're a quality company for their sector, right? And they're at 52, they're near their 52-week lows. I've seen where it has bounced off of an area of support previously. and I see where that next target may possibly be, which would be where that last resistance was, because it didn't break through last time. So it's just retesting, finding some more buyers at the support to get back up and push through that resistance. So I found it being a valuable opportunity. That too, I shared with some clients as well. I think the next day that I shared the specific play that I was in, it was up 80%. So these are some of the things I also do with my products and services. I'll leave a link in the description to go check that out. Within those services, I provide one-on-one guidance for long-term investing and trading. I'll share some plays as well, and, you know, let the family eat, as they should. Each one teach one. That's the motto to go with. So those are just two examples of two companies that presented some opportunities a couple of weeks ago, despite the rest of the market being at all-time highs. That's how you want to go about it. Never want to buy at a high. Look for support areas of quality companies to get in on that. The takeaway so far right now is that we are in extreme greed, as you can see here. That means people are about to start taking profits. You don't want to be buying and becoming somebody else's liquidity. That won't do you any good. I'm not a big fan of shorting so much. I mean, it's an option. You can do that. You can short stocks if you'd like, or buy puts. But because I understand that the market is rigged to stay up, I don't do as many puts. That's something to keep in mind. And just think about that too. The fact that the Fear and Greed Index just in April, this is the second week of July, literally was at like 2, and we're at extreme greed. If you can find the patience to just allow the market to do what the market's going to do. Anytime it's been in extreme fear, eventually it's going to get back to that extreme greed or greed. You just have to buy time. Allow the market to do what the market does. And what does it do? It's rigged to stay up. I also did want to share this from Yahoo Finance. Since the end of June, it showed some of the biggest winners from that first half of 2025. Palantir, of course, with all those global tensions, and Palantir having a plethora of contracts with the government for the defense and military AI systems, they are the clear winners for that first half of the year. So looking at this, me personally, I'll say, all right, cool. These companies did great, but more than likely they're all at all-time highs. So I'm not looking to buy. It's something you can like observe, keep an eye on, see if there's a pullback. But some of these companies are super extended and are due for a pullback. Those are my takeaways for July as of right now. I think my main things that I'm looking at will be the crypto side of things and also crypto associated stocks. So like we just saw coin, you also have MicroStrategy. I'm not a crazy fan of MicroStrategy, but hey, they do buy a lot of Bitcoin, and as Bitcoin goes up, MicroStrategy will go up. Whether that cycle will always work for them, that's another story. Full disclosure, I do not own any shares of MicroStrategy, but those are my takeaways for this month so far, at least. Make sure you guys like, subscribe to the channel for more information. If you found this valuable, please definitely like this video so I can continue producing valuable content for you guys. And I'm gonna leave a link to my website so you guys can check out the services so you can get returns like the ones I mentioned my clients have received just within these last couple weeks. Keep studying, do good research, share the research, and I'll see you guys soon. Alrighty, y'all have a great week.